All right. Wow. We are seeing volatility into this Thursday bell. So great time to be streaming. Hello, everybody. Hopefully everyone can hear me and you are doing well. We'll move over to the screens and we'll start talking about a few things. Hello, Jacob. Hello, Johnny. Hello, Mark. Usam Vision, Dr. Horton, Shane. And I hope everyone's doing well out there. And of course, I think we're going to have a pretty good couple of hours here talking about the markets. We've had some pretty large moves in the Asian futures session after, of course, the Fed fizzer, we'll call it, if anyone's seen my video. Bit of VIX increase, bit of disappointment in the markets. Obviously, one of the things that I do think is fairly important is the expectation that potentially the Fed may raise rates faster than everyone expected. The market was pretty confident that, of course, there would be low rates for even longer than what the expectations are here. That may just be the excuse. Of course, with all of these events, often it's that buy the rumor, sell the fact, or sell the news. Pretty common type of thing. Now, where did we stop? We stopped right at, of course, the resistances. Let's have a quick look at these indices. Both indices set to be putting pressure on the low side. The S&P is probably going to be dropping more because of tech, and more because of the reason of these kind of growth stocks not doing well usually when interest rates rise. And maybe that's the expectation there. Afternoon, hello, evening, good morning. There's quite a few people in here from all over the world, so it's awesome to have so many people. Hey, Mark. Hopefully you're enjoying Brisbane, enjoying the fact that you are allowed to walk outside your house. That's nice. Hello, Jeremiah. Hello, Leach. Hello, Siddharth. Good to see you. If Tom is streaming, likely volatile brewing. That's true. Pretty much, I think most streams we've done recently, when I've got off the stream, maybe because the first hours have been pretty bullish, and then, of course, about an hour and a half, 2 hours later after the open, we've had that bearish movement. So we'll be talking about these indices coming into the market. Basically, it looks like we're going to put downward pressure on all of the supports today, specifically on the Nasdaq. I think a lot of people will be looking at the Nasdaq lows. We'll talk about the candles that we're seeing there as well. But yeah, quite a lot of volatility coming in. Just wanted to talk about some news, and I just want to say this particular company, of course, the Snowflake company, the one that I believe Buffett's company's in as well. Just remember, this is a pure hype kind of thing. If you've been around for a while, whenever you look at IPOs, generally what happens is if you can't get enough of the IPO, specifically maybe you put in, let's say, $10,000 and they say you can only have $2,500, well, usually a lot of people get hyped up and buy it day one. So I think, like most of these tech companies, they often have a few rocky years, and most people will know I have the 5-year or at least 3-year plan on these. So I might like the company, but I think that there'll be further downside pressure before upside pressure. It's quite common for these to go between 80 and 100% the first day. Twitter, Facebook, all of those type of ones. Hello, Maria. Good to see you here. Hello, Kartik. So many people coming in that have been coming to the streams recently, so that's good. Remember, keep those questions coming because that helps us answer not only your question, but probably something else going out there. Quick reminder, when we're doing top-down analysis, let's just have a quick look at what's going on this Nasdaq. We'll get rid of this line. We don't need that there. Let's have a look at these candles. So we still haven't, even with this movement right now, 2% down pre-market here, 2.1%. We haven't even taken off last month's gains yet. But remember, when it comes to candles, the monthly means the most. So will we end this month down? We don't know that yet. But certainly we're putting pressure on the lows of last month, and we're really coming down to that point. Let's take a look at that weekly. This would be a pretty bearish close here, especially if it got underneath the previous price. Big rejection off the highs over here, off the resistance. Looking very, very bearish right now coming into the open, but everything can change, of course, in the next 2 days. Oil was up big yesterday, makes no sense. That's true. It was up quite large yesterday. Oil's a pretty manipulated market, though. It is difficult to trade even at the best of times. Where do you think Tesla might go today? CES raised target price to 400. There's been a couple of raises, but they've been coming in for some pretty low levels. So they're like raises from 160 to 300 and things like that. According to LiQWYD cycle analysis, more downside to come, ABC correction. Yeah, look, I mean, LiQWYD and all these kind of corrections, I think for me, it's really about looking at the supports, looking at the resistances and waiting and seeing on those type of things. There are cycles that definitely happen. And at this point, you know, we've been talking about this 20 moving average on the weekly now for how long? Quite a while. And the market's certainly coming down trying to test that. I do think there'll be a lot of buying pressure here at this 10.5 though. It would make a lot of sense. The 20 has been historically very strong for the Nasdaq over time. 20, little bit of an excess kind of sell through, excess sell through. If we got a super excess sell through, it could go all the way to the 10K. But I think there's still a huge amount of sentiment buying here. Remember, the selling has been coming into the end of the day, meaning the big guys have been selling the markets and they've been letting the retail community buy the dip the whole way through. So with this Fed catalyst, potentially they push it through and continuously, I guess, you know, take a lot of that buy calls and short dated options, all those type of things out. Red days are buying days, says Shane. Absolutely. Yeah, we'll have a look at that share if we can. Tech Jane, for sure. All right. Well, welcome everyone. We're just getting hyped up for this Thursday bell. I don't have the sound effect yet, but I have been changing a few things behind the scenes and we should have some very interesting stuff. Let's talk about this one. Go down to the daily now on the Nasdaq. Let's bring that up right now and have a look at what's going on with the bodies. So yesterday we did not break a new high, unfortunately. We are now testing the lows. We'll go down to the 4 hour and see what's happened in the Asian session. Now, something pretty bearish is about to occur. We may see a body close underneath this bullish hammer that happened during the Asian session. Now, if we see that, that's usually a fairly negative effect. Remember, bullish hammers have been historically terrible during this run. They've been pretty bad in general as a symbol. Like some people may know them as pin bars, but when we've seen them get cracked, as in the level has been taken out by a body close, that's been quite bearish. So we get this close today, we could get through here very easily. And usually you'll get two opportunities. You'll get the close under, and then of course you'll get the pressure close where it'll go underneath this zone, underneath the 11,000, break clearly, come back up, test the 1, 2, 3 at that point, because obviously we'll have this 1, we'll have the 2, and we'll have, you know, maybe a third base that kind of forms here pre-market, and then we'll be testing this 11,000, see lightning bolt down, possibly the 10.5. I think that would be a pretty cool level for a lot of people that are looking at dip purchases. If you're somebody that's in the market long and you're worried, from long holds perspective, I don't think we need to be too worried about this correction. This is actually healthy in all trends. We want this type of thing. You don't want crazy, crazy, crazy markets to go up. That creates super busts, and you don't want that because they can last for way too long. Super busts last way too long. Siddharth says, I was long Tesla at 459.7 near its apex. Stopped myself out immediately for a 60-cent loss. Look at it now. Yes, we'll take a look at that in just a minute. So a lot of bearish pressure coming in here on the Nasdaq. This is a very interesting chart. I think Nasdaq to me is the most interesting one at the moment. All right, let's take a look at the VIX now. Let's move over to the VIX. So volatility is back in the markets again, it looks like. This particular VIX is spiking to 2771 pre-market. It's not unusual through a first initial spike to see an initial kind of second spike that isn't that high. Again, I don't know whether we're going into incredible volatility here. Remember, these type of spike events usually around flash crashes. So if we get through those lows today, though, expect the VIX to increase in terms of fear. So we get through that low, I think the VIX would instantly start moving up as soon as that happens. That will be usually coinciding at the same time. Remember, VIX is correlated with the S&P, with the Nasdaq, or inversely correlated anyway. Heavy selling overnight. Yeah, the only problem with selling in the futures is it doesn't mean it's real. When Wall Street comes in, they sell off into the end of the day. It means it's real. That's the real volume. When we see the Asian futures doing it, it doesn't fill me with confidence that it goes through. Hey, Troy, I see you out there. Someone says you should have repositioned in Tesla. Well, let's have a look at Tesla. Obviously, Tesla's hyping into that battery day event. We're looking at a 5.38% sell-off, 418 pre-market. Now, we are going into two moving averages here, the 20 and the 50. We have some structure formation around this 390, just underneath the 400. Previous resistance on the 4-hour, previous support, previous support. We zoom this in a little bit, you'll pretty much see it. Basically, we put that line across, and it's certainly been tapped quite a few times around this 386, 390 kind of area. I think the market could get down there today. That is certainly possible if we see increased bearish pressure. The thing is that we may not have Tesla, though, moving towards the lows that quickly because there is still a lot of hype and anticipation for the battery day event. I think that will mean that things like Apple are more likely to sell to new lows than Tesla to sell underneath where it went to the other day, which is that 330 kind of zone. The 330 zone was very strong. Previous market structure resistance becoming support. We actually saw that live in the stream. It was an excellent little level. Stimulus deal, 1.5 trillion Trump would sign. Yeah, I think Congress will certainly want to make a deal. Basically, what the Fed's telling us is they're saying, hey, yeah, we've got potentially a few little tools left, but let's not use them at a high market. We cannot do that because we don't have much left. They obviously do not feel very strong about it. Hello, Gemin. How you going? Hey, Antonio. Gravestown on the Dow closed yesterday. Big warning. Yeah, absolutely. So a lot of these type of warnings are coming in through the markets, getting quite a lot of movement pre-market. So we'll have a quick look at the dollar index as well in just a few minutes. But overall, we've got VIX spiking up. We've, of course, got the US 100 putting pressure on that previous Asian session low that we had over here, which is very interesting pre-market. Remember, close underneath this is usually a very bearish sign. And the S&P 500 overall has not been as negative, and that's because it's really the tech sector that's leading it. Again, we've got this low through this 33.20 zone, 33.15, previous bullish hammer, pin bar, whatever you want to call it, on the futures. We're only halfway down there compared to the Nasdaq. So when the Nasdaq sells off, it's going to sell off much more aggressively due to the growth nature, due to the current concerns being over probably interest rates in the future, or whatever else excuse they're coming up with. Apple got new TP. Don't fall for it. It's a traps for the bulls. What do you mean by that, JBot? If you can explain yourself a little bit more, that'd be great. Basically, Apple still pretty much remains at that $100 area is very interesting. So $100 area for Apple, very interesting. Well, this is very interesting here as well. We're under the 110 for the first time on Apple. So 109.85. We're about to open new lows here if that does happen. Wow. This is a very big sentiment runner. 109.85 lows. Let's see if we can hold those into the market. Very interesting. Damn. Get under that structure at that 100. Psychological zone, structure, previous highs. We would expect that to probably be the hold zone. Let's go out to the weekly here. And we see with Apple, $100 is also where that 20 moving average is. I'd love it personally down here because I'd be pretty interested down here as well. But $100 is certainly a tap zone. We had 140 almost in terms of the split for Apple. So there's a decent amount of percentage there. You're almost looking at 40% upside if it even reached the euphoria highs that it did a few weeks ago. Need to remember though, put it in perspective every time. Where was it in August? This is the August week. Only a month ago, we were looking at 106. So we're thinking like this is a super bargain. But is it really a super bargain when we had this kind of movement up? We're not even at a really big pullback in the markets yet. give you guys a couple of tips. When you're looking at pullbacks, a normal pullback in the market, a healthy normal pullback from a fib perspective, you usually want between a 38.2 and a 50 fib. You don't usually want the 61.8. Now, I know everyone says golden fib, so good, awesome, great. Realistically, though, most of the time, healthy pullbacks in indices come back to in between these two zones. They don't usually come back just to the 23.6. That's in a super aggressive trend, but when you have a euphoria with a potential blow off here, this is the kind of thing. You see the 38 to the 50. Another thing is if we continue to see this downward pressure come in the market, what does that mean? That means blow off event most likely, and a blow off event because of this, of course, massive rejection that's happening here, similar to what we've had in gold. A longer time to get back to a new high. Will it eventually get back to a new high? Sure, but it takes a longer time. Let's have a look at gold and I'll show you what I mean by it. Load up that gold right now. Got a lot of questions coming in here. Thank you very much for the subscriptions as well. Appreciate it as always. Let's have a look at this gold over here on the weekly. Check that out. So we had that massive euphoric run on it. Obviously, this is all that everyone was talking about a few weeks ago, and now we've all forgotten about it. Gold's become boring. Get rid of these lines. And then we had that blow-off event, the big sell-off event that went really, really hard down. Now, this is a clear blow-off on things like Apple and these other stocks. They're moving down a little bit slower with that first initial bigger sell-off. But usually speaking, it will stay in this trend or stay in this range for an extended period of time when you see drop-offs like that. Usually a bigger extended period of time. And gold is still struggling because of dollar strength and dollar weakness due to the Fed stuff. Let's answer a couple of questions from the room. Target price was rise to 130. Was this for Apple? Yeah, absolutely. Now, Antonio, you're asking a question that you had in the comment section. I was hoping you'd be here. I will answer this. Would you pick? I'd like to pick your brain on something. You look at the past 2 to 3 years, you see fewer and fewer indices topping out or topping. And by August 2020, we were down to 2, the Nasdaq and the S&P, which you may have already seen the top. What does this mean? Okay, so I think there's a few things to come here. Well, firstly, we're not going to see too many indices topping out anymore because obviously the tech has been the big move, and that's what's pushed the S&P to a new high. Dow's obviously lagged it, so has the Russell 2000. Obviously, FTSE, ASX, all these other indices around the world, they don't have the concentration of tech, which has pushed through the Nasdaq so hard. Now, it's expected during a crisis period that we're not going to see new highs, usually as fast as we did, of course, with the Nasdaq. The other thing, though, that I think is the more interesting point about indices topping out over the last couple of years is that we could be in for the decade, or what I guess Ray Dalio calls the lost decade. And what that means is we may actually have bad indice investment. Doesn't mean bad trading, it means bad indice investment, where certain sectors are kind of going to die off or not perform well at all. Certain sectors are going to do well, and there'll be a lot of stock picking that you can do, but potentially a very lagging stock market. So if you look at the Nikkei, if you look at Euro stocks, any of those kind of things, they had periods after recessions where their market did not recover correctly and in fact lagged, while some companies did well and some companies did terribly. So if we saw a complete and utter no recovery, let's say in the banking finance sector, we saw no recovery in maybe the transportation and leisure sectors and other things, then we could see a very lagging S&P for a while, because of course the tech stocks have already put on so much. BTC looks interesting. Yeah, so we've got BTC on the right-hand side chart. I will just quickly bring up something that I want you almost to take a snapshot of, because it'll help you with everyone's trading out there. If you ever see this in a stock, specifically look at these wicks. This is a pure sign of accumulation, especially around a key level. 10,000 here on Bitcoin, very beautiful level. Amazing level, huge amount of wick offs in this zone, shows a huge amount of accumulation. We have that range. And then of course, we've had the strong breakout. So I really like that. But specifically, if you ever see this kind of thing again, I'll tell you right now, it is a very strong signal. We covered it on the channel quite a lot over the last couple of days. We talked about it last week. We talked about this week. Took a little while to break. But this is the kind of thing that when you're investing, if you ever see that in a stock, you like the stock, it's come off a relatively decent sell-off as well, That's a beautiful accumulation base. Every time the wicks are the key there. Strong buying pressure constantly. Some whale, as they call them in Bitcoin, would be purchasing all the way through there. So Antonio, I do want a little bit more from your question there. So when you say it signals the tops, you mean that when it hits a top and it sells off, it doesn't come back for a while or something like that? They said 146 when it's split. Now we'll look at it 111. Yeah, look, Apple, like targets are no good. So anyone that uses those kind of targets out there by big banks and big institutions, the way you do it is you take the average of them all. So effectively, if you were looking at, let's say, Apple, we'll look at Apple right now. And the great thing about the American market is you can use finviz.com and just bring it all up. We looked here. These are all the targets. Now, obviously, these targets here, you need to fix them into the new $100 price tag in terms of just making sure you quarter them down and fit them down, etc. But effectively, what we've got here is we've got basically levels all over the place. They don't really know because it's too hard for them to come up with these levels. What you do is you take the average of all of them and then you use that as one of your tools. And it doesn't mean it's much. It might be 10% of your decision making. So what you're going to do is you're going to then find your technical analysis level. Ideally, you're kind of buying a good zone, nice dip, maybe back down to a moving average, accumulation, all of those types of things. You add 10% possibly of your overall decision to an average of the earnings expectations. Now, why do you do this? Do you actually care what they have to say? Probably not, but you do it because a lot of fund managers, a lot of people do follow it, they do use it, and it's a heavily used industry tool to convince people to buy stocks. So think of this. You go to JP Morgan, they say, our analyst, they just upped it to $150. It's only $130, good deal. Buy today. What are you going to say? They give you some 10 pages of notes about it, and you think, yes, I know I should buy this. So that is part of the reason you want to add them, but I really like the average expectation. And you take out the outliers. Sometimes there's like a crazy person and they think Tesla's worth 4K a share. And then you don't use that one. You use the people that are in the right levels. All right. Gemin says, so glad I didn't do any trading all week until today. Entered into short position on the ASX in the early morning and will likely be shorting S&P 500 tonight, depending on how futures go. Fair enough, Gemin. In all of these things with the Fed, with all of these kind of massive bits of news that come out, sometimes it's better to actually not trade in front of the news, especially trading. Investing, you can buy dips ahead of news. You can do all those things. You've got a longer plan. But when you're trading, day trading, scalping, intraday trading, whatever you're doing, even swing, you don't necessarily want to be doing that. Absolutely. Pre-market, it looks like Moderna, Carnival, Tesla, and those kind of things are moving the most. I just pulled these off the news feed here. If you don't have this FinViz news feed, it's not bad just to kind of see a bit of free information in the morning about all the main ones. Got Reuters, got, of course, Bloomberg, CNN, etc. all here. And there's a couple of opinion pieces here if you ever want to check those out. All right, let's have a quick look at the broader markets right now. So we've got Dow down, of course, 1%. We've got there the sell kind of symbol in terms of that shooting star there, or looks like it could be also a decent pattern formation actually today. We'll have a look at that a little bit later. We've got, of course, S&P down 1.49, the big one, Nasdaq down 2.13, Russell down 1.38, and around the world, not down as much. Now, some of that was, of course, sell-off into the event, so therefore the flow-on wasn't as big. But overall, the biggest thing getting hit again is growth stocks, specifically tech. VIX is up, bonds are up a little bit. Treasury 10-year notes, if you're ever a person that is looking at kind of trading, let's say the Nasdaq or something like this, if you look at TNX or something, effectively as this goes up, usually it does put pressure on the Nasdaq. Now in this case, it's obviously down today in terms of yields, but if yields do go up here, that is not usually a great thing for the Nasdaq historically. All right, let's take some more questions of the room. I have a buy order of Apple at 97, but believe it can go to 90.87. It could certainly go that low, but at least you have a plan, Suj. So that's good. If you have a plan, 97 is fair. I understand why you have it at those zones. Let's bring up Apple because it's a massive sentiment tool. I also want to see if it's continuing to press down. So still 109.95. So basically, Suj has it really where about here, 97.29. Okay, right there. Let's also load up another thing on Apple right now. Where's my pivots? I've got pivots up here for everybody. I think it's here. All right, so here's the pivots. We'll load up pivot monthlies on Apple. We'll see whether this thing loads. There we go. So we're not even at an S2. So that's right around the 100 as well. That's pretty strong to have like a previous central and also an S2 pivot monthly at around that 100. I think 97, I can understand that you've got it there. I'm not sure exactly why you've got it there, but yeah, the 100 psychological should be pretty good. Got monthly S2 and previous central all around that level. All right, we'll look at dollar index. Repeat of 1929, says JBot. Not sure about that because 1929, they did nothing. They literally did nothing. If you actually have a look at the central banks back then, they were like, yeah, it's all good. They didn't get involved. Shane says, no, it's 2020. Absolutely. Trade options swing monthly. Options certainly do avoid a lot of risks in the market. Do I think it's a good time to short or too risky? I think with shorts, you've got to be very, very fast and nimble in the market. I prefer to use options for that type of thing than CFDs because you allow then the market to go through, of course, your stop loss and then come back and do the right thing. Kind of removes that one problem of where do you place your stop loss, where do you place your take profit, that kind of thing with options. I think you can certainly do it. I would be looking for flow-on effect, though. I usually go the conservative. Remember, we want to see the market close below this particular candle over here, which would be bearish, get under these two zones, close below, come back, test, sell down. That would be ideal. The comeback test is kind of the best entry always from a technical analysis perspective. The conservative entry, the painful one to wait for, but always the best one. Friday will be a bloodbath. Jacob brings up a good point. Okay, so he said he also didn't trade this week, thank God, ahead of the Fed. Yeah, fair enough. So basically, Jacob brings up a good point. Friday, if we see this flow-on effect into tomorrow, you're going to see a pressure on potentially some people that have taken leverage closing out positions, potentially some weak options expiries, all those types of things. Now, we have options expiry in the US as well, so effectively, we've got like a bit of a compounding effect here, which will put pressure on the markets. Now, also, people don't like to take risk into the weekend. If there's a lot of trading going on in the markets, they close those positions off. So selling from today into tomorrow would further cause probably a bigger sell-off on the Friday night close. Longer term option puts aren't a bad idea. The one thing with puts is usually pay a lot. If it's already moving, then you pay a lot for it. If you wanted to go with, high kind of payout puts, whenever you see a resistance, which is a resistance, and then it comes back and tests a resistance, even if you get like a little engulf here or something, they're going to be like one of those trades where you might take the position. You might say, okay, I'm going to take this position 3 times, I'm going to take this position every single time, and it might be a 5-to-1 payoff put, okay? You know that as soon as it gets past here and closes, your trade's stuffed. It's basically over. That's confirmed high. When you're trading a top of a channel or a range, and then you put the put in, no one is looking at that put. So you can get the put a lot cheaper up here. The put becomes a lot cheaper because the momentum is bullish. Now, you're obviously countering the market, but you're countering it at least a smart point. Previous resistances become, of course, the point that you can sell at. If it's going to fail, it moves through close confirmations with the candle. So the candle goes up, close confirmations. As soon as that happens, you can just close the trade, take the loss and say, take the portion of the loss and say, oh, well, I tried. Think about the markets that way a little bit. You can then play spreads down the low here as well to be even more out of the market. There's a lot of ways of playing options that create a very good opportunity. Tesla to fill the gap at 420. We'll definitely be looking at Tesla into the open. Whole bunch of great questions coming in here, so we'll answer as many as we can. What do you think of the support line on BTC is since it's going to fall before rising again? Okay, so with BTC, I think that when you're looking at gold and Bitcoin versus the US dollar, the biggest problem we've got here is that the US dollar could strengthen if we see a further sell down in all equities. If we have that sell down, then we've got a strong support here at the 10.5, 10.6. Very strong. We go into the 4 hour, you're going to see it immediately. Previous resistances would act like support. We've got a 50 there as well. So around this 10.6 level, you would expect some buying pressure from Bitcoin itself. But against the US dollar, you're at the mercy of the DXY. So let's have a look at that DXY. Still trapped between 92, 93, 80, still remains that high resistance. We saw a bit of an Asian session flurry in the US dollar, hit kind of this high, sold off straight away. If we see flow on effect, we hit the 93.80, that's going to be key resistance. We get through that point, we close. I've said it many times in this channel. The above 94 range here opens up 95, 96, and back to literally bullish US dollar. Even though sentiment might be bearish on US dollar right now, this would be a very bullish kind of thing to see. Very bullish. 93.80, 94 remains a very key zone for this dollar index. 97 was previous resistance. Wasn't pretty much 400 previous resistance. Obviously it got split, so I know that's a bit of a thing. Nvidia also down pre-market. Nvidia is the hype train that will not stop. Let's load up Nvidia and have a look. Probably deserves to be down 10% pre-market. And I know it won't be, but it deserves to be. 3.11. Go to the daily here on Nvidia. Could be a bearish flag here with this sell-off. I like this share a lot, but I hate it at this price. I also hate it because the insiders keep selling it. If we have a look at the positions that have been dumped on this stock, let's have a quick look at this. This is obviously completely open information on FinViz, and I do understand this CEO dumps quite regularly. Have a look at these dump levels. So here we've got September selling. We've got August selling by, of course, this gentleman, the president and CEO, sold some decent units. But this is quite a lot of money. Now, he's always been selling this kind of amount, but notice he upped it slightly, I believe. When I was doing my analysis last time, he was upping it in July, because I actually did analysis on it in July. So we had $200,000 option exercises, and we had them again. He's been selling pretty decently, but really it's only been starting this year. This is a smart person. Look at that. Look at the profit. Oof. Not bad. Buy a couple of Beverly Hills houses or whatever you want to buy. So quite a lot of shares being dumped by them. It's a decent amount of net insider transactions negative. So negative 25% insider transactions. If you actually look at the transaction level, I'll be making a video about this across most of the tech stocks. Almost all the tech stocks have negative transaction volume, insider transaction volume. I'm not sure what the 6 to 7K is, but I assume it could be talking about profits or unfortunate losses, but that is to be, yeah, it does happen with trading, unfortunately. Job claim data came. Oh yeah, I forgot to even cover it. Let me, it means so little to the market now. Let's just quickly bring that up. Have a look at the calendar. Should have been hyping in that figure, shouldn't I? All right, let's have a look here. So jobs claim figure came in. Little bit, pretty much around the same. It's been fairly, the reason I'm not covering it so much or even caring about it is because it's not really that important anymore. It's being forecast correctly. With these new news events, if they're not being forecast correctly or during this initial kind of period, that was a problem. Now, if this number had come out way worse, it would have been super negative. It would have been super negative, but the number's just not that bad. This is Forex Factory, by the way. It's good if you want to set it to your own time frame in the world. A lot of the tools with economic calendars, you can't set them to your time frame. So if you can't set them to your time frame, that sucks, especially with daylight savings time and other things around the world. Thanks for the subscriptions there. Really appreciate it. Thank you very much for joining the FX Evolution trading community. All right, let's load up, just have a quick look at that pre-market Apple. I'm very, very interested to see whether this holds down below this 110 range. That's a bearish symbol if we get through this 200 today, guys. That 100, that 97, as some people are calling it, the 97 to the 100 zone. We've certainly got some very nice structure there, though. So I would like that if it did happen on Apple. On the 1929 point, the Bank of Japan has been trying to juice up their stock market for 30 years. Have you considered the downward pressure can outweigh the money printing? It certainly did in Japan. Yeah, deflation, it was certainly a cause of QE. So there's a video I want to make which really talks about what actually the central banks really end up doing, but it's counter to what you think. That's the thing. And in Japan, yes, it was certainly a disaster. They own something like 50+%, maybe 60% of their bond market by now. Imagine that your central bank owns almost all the debt in the country. That's crazy. But it certainly is the point. And again, it could be one of the pressures that we have over investments over the next kind of decade as well. Why is Slack so low? Doesn't look good for the future. No, Slack did not come in with great results. That's obviously work if you want to have a look at it. And unfortunately, like I like Slack, but obviously they need to get it a little bit better. Copper is still very, very strong. We're still in this big channel. It's a very nice channel technically. You notice we've trapped the range here at the 2.95. We've trapped the range here at the 3.08. If we have a look at the daily, it becomes even more apparent that it's a great level based on previous bodies and body closes, and of course the wicks at around that zone. So very, very nice trap. We use copper to really determine whether we're in a crash or we're in a correction. And at this point, copper looks like it's more of a correction phase than a crash. Now, if copper gets through 2.95 and pressure's under 2.8, we're in a crash. Under 2.8 for sure. All right, let's load up those two indices back near each other because it looks like there's a bit of movement off that jobs figure, is there? So 3338 still on the futures, what I'm seeing, 1.57 down on this particular one. Still putting pressure on. It is going to be a pretty nice first 15 minutes into the open. Very exciting. Hey Tom, is there strength in the odd US dollar? Will we get as good as a few months back? It's a good question, Troy. Now, odd dollar certainly could go quite strong. Now, it really depends on the DXY though. So that US dollar, if we see that go through the 92, then yeah, our dollar will get incredibly strong. In fact, as soon as it gets under the 92, a lot of top-down approaches on this channel would know where do we expect the dollar to go next? Very clearly into the 89. Previous resistances over here, that would probably pressure the odd dollar somewhere around 78 to 80 cents. So really, it's all about DXY. If we had DXY falling under 92, you'll probably see odd dollar jump up to upwards of 80 cents to the American. Market will dead cat bounce, says Jacob. Short all bounces. Oh, all right, Jacob. He's bearish, guys. He's bearish. He's got the bear boots on today. PayPal is killing me. Sorry to hear that. Who uses Shopify? Quite a few people seem to. Jacob says he's laughing about snow. Can't wait for options on that one. Going to load puts. They don't make a penny, but grossly overvalued. Well, you're not really wrong there. Let's have a look at this snow chart coming out of the gates. And we'll actually do a little bit of a comparison with a few other ones. Thanks very much for your subscriptions, by the way. Whoever just subscribed. Saw a couple come through, which is great. I particularly like this person, Jack Cardi90. #winner winner chicken dinner. Sounds like he plays video games. Here we've got the snow entrance. Look how wild it got. I love this market right now. We're getting super wild sentiment. Go where the sentiment is, yeah? If you want to have a bit of fun, remember, do it with, of course, quality risk management. If you go to sentiment-derived stocks, then they move incredibly fast each way. They certainly are a little bit of fun. They remind me a bit of a crypto, really, or a leveraged kind of asset. So these particular assets come in hot and then not done so well. Let's have a quick look at some of the other high-profile releases over the years. Let's take a look at Snap. Now, what happened when Snap came in? Let's take a look right now. We'll go to the weekly. So Snap came in super aggressive and then sold off. Absolutely crazily aggressive. And then, of course, all the way down to $5. Now, how many years was that? So here we've got full year and then got a really big dip off this year as well. And then now it's back up. And that was, yeah, pretty much a period of 1 to 2 years. I'll quickly do a quick shout out here for Shane. Thank you very much, Shane, for my coffees for tomorrow. Appreciate the $10 Australian dollars. Thank you very much, mate. I think you've donated almost every stream, so I do appreciate that, man. And I do love coffee. After just a couple of people reminding everyone, I'll be doing a massive election day, US election day stream. Obviously not talking about politics, but talking about the markets. So if you want to come in for that, we'll be doing 12 to 14 hours. I might put even Shane's money towards drinking some serious coffees that day because we'll be doing a big session. I think that'll be an absolute great day to be looking. I'm taking it off the whole day. Like, I know I'll set before it, and then the whole day will be dedicated to the stream. It'll be a lot of fun. So here's the Snap launch. Let's have a look at Twitter after that, because it is always good to look at these launches. Another crazy launch, came out of the gate super bullish. I remember this one very well. Everyone was telling me about it and they were like, yeah, Twitter. And then of course it dumped off, took a couple of years to recover, and then suddenly found its feet. And it's been a decent little investment off dips since then. Not too bad at all. So of course, Twitter, another one of those stocks that's done quite well. Facebook, another one that came out of the gates very, very strongly, and then of course rejected. Now it's gonna be hard for me to, there we are. So it came out super strong, hit a 44. I think it was set to hit about 20 something when it was meant to launch, and then bounced all the way down. A few years later, found its kind of base, and then became the company that it is now. So just remember, the hype is never usually worth it. TA on Starbucks. What a great time to do Starbucks. I'm going to do that right up. I haven't even looked at Starbucks in ages. Haven't looked at it in ages. Let's have a look at this Starbucks. It's going all right. We've got opening soon, everybody. And of course, in the US, they're kind of open in some states. Starbucks is an interesting one. So let's have a look at the monthly first and do a bit of top down here. So firstly, it's gone mental in the last couple of years. Very big profits. Obviously had the consolidation through 16, 18. Big sell-off. It was a good buy, I guess, in hindsight down here. And very, very strong recovery. Now, I do expect Starbucks to do relatively well. Do we actually have data here from the GFC? Yeah, we do. So it did get kind of pummeled during the GFC. Most stocks did. Remember, McDonald's, which is one that I've always been incredibly bullish on this channel, usually does well in recessions because people eat bad food, and when they're unemployed or things go wrong, it's the reality, unfortunately. And then we usually see those kind of stocks do well. In fact, McDonald's was the only positive stock out of the global financial crisis. So this stock did get pummeled a bit. There'd be multiple reasons for that, I'm sure. Let's go now over to the weekly. We can see that we have some resistance up here at the 93. Obviously, the 100 is a key psychological zone. The market stopped just before the 100 last time, which is pretty key. Let's go down to the daily now. We've got the 2050 cross, by the way, on the weekly, which I kind of omitted there. That is strong. This was a nice little structure buy. So we obviously had previous 83.78, came down, tested it. We're at the resistance now. Now, would I want to buy a stock here considering the market? No. Is it down much pre-market? No. I would like it back down at this level. 84, previous resistance, bit of structure through here, a little bit of resistance. All this zone looks good, and we've got a 20 as well. After an initial move this much, I would expect it to sell off. You know, I'd I don't know. I think there's always another opportunity. So unless I love this company, I don't mind this level, okay? But I'd be preferring a double top here, sell in $80. I think it's possible too, based on this big move. I haven't looked at their fundamentals, but these are the two zones, 84 and then the 80. Both those zones interest me a lot in a stock like this. I'd love to see it sell off here, come back down, test the 84. We see a little bit of bounce off that. That'd be like a dip zone. And then underneath that, this 80 zone. That's a very, very nice level though. Strong no matter when, even if it had bad earnings and went into it. Can we look at Beyond? Yeah, sure. We'll have a look at that a little bit later. I know Beyond quite well. That stock is a roller coaster ride. All right, let's go back over to some of the pre-markets here. I want to look at this Nasdaq. I still want to see where it is. Siddharth said, Snowflake rechanged its name to Avalanche. That's a good one, mate. So we're putting pressure on the downside of this pin bar hammer right near the market. Oh, I'm really, really excited. This is actually one of the first streams I feel like, you know, the open is cool. We haven't really experienced a proper sell-off. It's always been buying pressure in the morning and then selling in the afternoons when we're not streaming. What could be good to get shorting today, says Regilio? Well, pretty much anything that's a growth stock. But you got to be careful. Obviously, growth stocks are the ones that get the pressure on during these kind of events. Things that have gone incredibly high, incredibly quick, that are hitting new lows, breaking through structure, that kind of thing is what you're looking at. All right, going through a couple of other questions here. I can't go through every one of these shares, unfortunately. Some of them just, I don't even know what they are, so I'd have to just look at it. JBot says, overpriced, wouldn't pay over $70. I'm not sure what that's for. Could be what we're looking at in Starbucks. Remember, when you're looking at TA, if you have fundamentals that back up with the TA, that's awesome. That's what you want to do in stocks. Use both together. A lot of people will say, oh, you know, on an indice, you can trade at pure TA if you want to. Obviously, Forex the same. But if you can bring fundamentals together with your TA, that's the best. Anyone that says, oh, TA is the best or fundamentals are the best, they don't really necessarily understand the other thing. Pavel says, Tom, if Apple not holding 110 USD support pre-market, does this mean 110 USD support is broken, or should I wait for open confirmation? You want to wait for open every time. Futures mean nothing, Pavel. Nothing. Wish they did, but they don't. A couple of other questions coming in here. I'm just reading a few of these just to go through what I've got. I'm out of NAS for now, waiting to see how it opens. Fair enough, Brian. What's the TA decision process to figure out whether to buy NDX now or wait? Okay, so if this was the fourth touch, it's a good question. We've got one touch here, two touches here, three touches here. A lot of people don't know this, but the fourth touch is historically, statistically bad. Okay, so if we went back up here, sold off again, the fourth touch, you do not want to buy the fourth touch, all right? Fourth touch is bad. Why is that? Because the fourth touch is generally that point where the market has already tested a few times and it's kind of like that fake level. It is really, really not strong. It's not the kind of thing that you want to be in at all. The fourth just seems to be statistically bad. Is the fifth bad or the sixth bad? No, the fourth is the bad one. Now, from the perspective of what you want to do here, the decision process for me, if I wanted to buy it, would be I want to see a high above here. I want to see this 11.2 get cracked, as in it go higher to that point. Why is that? We had a previous hammer that did not follow through. The pin bar didn't follow through. To me, I'd want to be seeing that signal. I couldn't just buy it here. I mean, you can buy it here if you're investing. Obviously, you're investing. It's just a level. Now, you've got to make your own decisions. I got to put that disclaimer out there. But, of course, the level down here, it's not bad. I mean, we know it's found support before. We know it's the 50 EMA. We know it's got so much 11,000 psychological, all these other things. So this zone is good. But overall, if you're looking at price action, you want to see it make a new high and more than just a couple of pips, at least a few points. I'll come in with the VWAP on the Monday stream next week, guys. I don't have it set up at the moment the way I like it. Is October mostly bullish? No, AW. It's usually a negative month. Usually October is a negative month as well. And usually the start. So the way I've seen it over the years, we'll have a look at this. Let's actually do a bit of reconnaissance on the old S&P 500 here for a second. We'll load up the SPX. I'll show you what I mean. We'll do a whole indicator session one of the Monday opens that's a bit more boring. This session is not boring. There's too much going on. But yeah, if we have a look over time and we go to, let's say, a weekly, what you'll notice is that generally speaking, we have a few weak months in the year. Now, I pulled that data for everyone on the channel. Effectively, the weakest month over the last 100 years, pretty much, has always been September. It's a negative 1% month over all of time. May is slightly negative. Feb is slightly negative. October is weak. November is decently strong. In my experience over the last decade, November has been strong for the last half of the month. The first half has been a bit shaky often, and the next half is good. And of course, December has been usually very, very good. The only time that I had a bad December was over here, where September was obviously the catalyst into October, which was also a weak month, November into December. It was just bad all the time. But generally speaking, you usually see Feb is kind of crap, and in the US anyway, and you usually have that September, October, August period starting a bit of a sell-off. We put a few vertical lines over. Let's have a look here. So this was an August sell-off, sold into September, found a bit into November, and then this one sold off the next year. So it actually found that kind of support through here. Year before that, let's have a look. September again, little dip. Usually September is the kind of crappy month. September again, little dip. There was the May sell-off. You don't always have those. This one, definitely a rarer one. I wouldn't usually use the April kind of sell-off. September sell-off, terrible. Obviously, that was the GFC. So look, the dips usually do come through this period, but I wouldn't say that October is historically like a glorious month or anything like that to be in the markets. What happened last year? I can't even remember now. September was weak. I remember that bit, which it is over here, and October was stronger. Yeah, I wouldn't use the seasonals from October though. Don't buy after candle close, always wait for the retest. Well, you're technically right, JBot. Absolutely. Always waiting for the retest on TA is very, very good idea. So have a look through some of these pre-opens again, just see if there's any movements. I didn't see too much there of interest on the SPX. The only real seasonal that's continued to hold true, AW, has been that the Christmas rush has been great, and also in the US, the week of Thanksgiving has historically been quite green. There's some tips. Check those ones out, guys. In an election year, October's been crap, but not statistically that crap, like 0.2 down. It's not that bad. So I've got your answer there, Alejandro, or however I say your name. Christopher, I see you, and obviously I appreciate your comments all the time there, Christopher. With Nasdaq already had a 6 to 7 down days in a row, are you concerned it's already had a bit of a run down already and is now a little bit late to get into the downside? So I think if we look at something like the Nasdaq and you consider the days down, there has been days up as well throughout this kind of thing. So we've had obviously first day, second day, that's, you know, net positive, but looks pretty negative. Sell off. I think this is just normal structure. I'm not really too concerned about whether it's too many down days or anything like that. Yeah, usually when you have like consistent bull kind of days, gaps, things like these type of things. Oh, this is bloody Apple, but it'll be the same for Nasdaq. 1 second. The reason why I thought it was the same is they look kind of similar. So yeah, we've had bullish days throughout the point. I was wondering why there's so many gaps there. So we've got the sell-off here. We've got 1, 2, 3, 4, bullish day, 1, 2 down, bullish, one, and then of course if we do have this day down, will be the second day. So I'm not really too concerned about consecutive days. Like over here we had a way more consecutive bullish sentiment, and this was a very small bearish one. Over here, mostly all bullish sentiment. This has been good structure formation and a well thought out market. Thanks very much, Tan Jovis. Appreciate the subscription there. All right, let's do a quick other thing coming into the markets that I think a lot of people have asked me about. So here we have probably the most well-known candle, the bullish hammer, pin bar, whatever you want to call it. Now, a lot of people look at this candle and they always think, how do I trade this particular candle? Is it any good? So I would say this, if this candle was $1 long, okay, so this was a $1 candle, the way I would do it is I would never place the trade instantaneously here, 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 or whatever. I would take this range and add a percentage to the range. So let's say that percentage is 10%, okay? So if it's 10%, what does that equal? 0.1. Oh, terrible one. 0.1 of a dollar. Now, when we have the 0.1, if we place our trade the 10 cents above, what we're doing is we're allowing the market to continue the momentum. You'll get a lot less fake outs doing that, and it's really, really key. The other thing that you can have is sometimes you have previous, like a market like this, and then you have a market like this as well, where it's done two bullish hammers. When it breaks through those, obviously this is a stronger trade, even better. So you can actually even potentially up your risk a little bit on this. Why is that? It's tested this point multiple times. Think of every single candle as what is it telling you about the market and what is it telling you about sentiment. From a TA perspective, the game changer for me in investing was when I understood that when you consider a candle from the momentum and what the market is telling you, that's really the data you care about. Yeah, it could be a bullish hammer, it could be whatever else. It's understanding what the consistent momentum is. If you have another bullish hammer after this, it just gets better and better by the time it breaks through. Consistently, that's why when it breaks through the lows of all these bullish hammers, if it did that, that's incredibly bearish signal. Because it's basically saying there was a reason why everyone was buying it, and now money is just smashing it lower. And you don't want to be in that. I hope that makes some sense. But yeah, breaking candles down to percentages is a game changer. Absolute game changer. What's my strategy today? So if I was going into a strategy for today, I would pretty much be looking at this Nasdaq. I would be looking at where we are right now, and I would be basically looking for a close below this zone, and I'll be looking for a retest short. That's the kind of thing I would be looking at. I think that makes a lot of sense on the Nasdaq. I'm obviously always interested in dip buys as well on quality stocks. So really I'd be looking for plans. Now, if we do close low here, I think it's a really strong signal in terms of shorts. I've said this a few times on the stream, and I've said it in the channel, that we really have, well, firstly, an amazing channel here now, which would have been a double bottom if it had broken through this point. What does that symbolize? Usually the distance of that move down into the 10.4, 10.5 area. We go to the weekly, it kind of lines up with our 20 EMA. I would probably be going for the 10.5 zone, but we do have structure lows right through here. So I also like it when patterns prove previous lows. Previous lows, pattern. Apple, very, very similar. What state am I in Australia? Melbourne, Victoria. Terrible state, the locked down state. Kevin says, Tom, euro pounds. Remember you called that out earlier this week? Yeah, I did. So we'll go quickly onto some currency. We've got 10.58 here. This is 32 minutes to open, and we are getting further bearish pressure, guys. Wow. So we'll load up this euro pound quickly. Let's do that. We'll use this list over here. Should have euro pound on it. I see why you're mentioning it. All right, so euro pound, I pretty much at the start of the week, this is in the private Discord, I make like a video for the guys in there. And effectively, I was talking about how the market could come back down to this zone. Now, the way that I see it is when you're so far away from these moving averages, you often do return back to them. It's kind of like mean reversion, yeah? We've got previous resistances over here, and then we've got obviously a point of roll reversal that can happen. Now, we should have had pound news by now, so I'm assuming that's affecting the markets. What we then want to do is we want to dial in on this time frame, and we want to see if we can get a lightning bolt or some kind of structure event. So usually when I'm looking at that time frame, I go to the 1 hour, and I try to find out what I can do. I also draw a fib on this zone, and the reason I draw a fib is because I want to see if it's pulling into a zone where there's a 38.2 fib and a 50 fib. Remember, I said on the markets, I'm a big fan of picking up trades in this 2 fib range. I like 38.2s and 50s of the last pull. Very, very cool. So here we've got a fairly aggressive move. That would have been news-based, which is a bit of a pain. This is certainly a signal for buy long. I think you could get a pullback here though, back into the 91.38 zone, previous resistance 38.2, and 2 moving average, a 50 and a 200 on the 1 hour. So that's definitely a zone that I'd be looking at, and it has found a bit of structure base here ahead of the news, and of course blasted off. This is a news move though, which is a bit unfortunate. Usually in proper TA, you would hope it just gets through this zone. You formed a low, a lower low, structured up a little bit, broken through. We know this is a pretty good zone, and you get through that point. You want to usually do a lightning bolt kind of concept. So you've got like a low, a peak, a higher low, and then a break of that peak. And that's usually a signal to go long. So Euro pound certainly is moving long. I'd want it to pull back a little bit now. It's had a nice aftermarket kind of move there. All right, let's go back over to the futures. Check out these bad boys. All right, so still bonds up a little bit. Gold, silver, everything against the dollar is slightly down. We have US dollar holding firm. My thoughts on Disney, we'll definitely check that one out. I love Disney, great company. I think it's got a bright future ahead of it. A lot of money to be made there, I think, for that company. Pretty much still seeing mostly drawn by the Nasdaq. Still keen on seeing what happens in terms of overall. 11,000. Oh, we just went under. 10,995. Wow. You're a bull. Might be on the wrong channel, says JBot. I'm not necessarily a bull, JBot. I'm a bear in the right circumstances. So am I bearish right now? Sure. I'm bearish in the short term. I'm not bearish long term. I think you're foolish to go against the market long term. I got my calls locked and loaded. I'm hoping for a 10% return today, says Nate. Oh, I hope for you, Nate. We're honestly on that point, so bit terrifying. Hey, RC, good to see you in here. Thanks very much for the subscriptions, everybody. Rory says he's been reading some horror stories in Melbourne. Must be tough situation with police being so aggressive. I think the police get a hard rap, and I think I agree with Shane on that. Look, I have friends in the police force, and realistically, they're given so little powers, and they get a lot of abuse. So, I hope that it's I know it's a bit of a 50-50 on it, but yeah, I really do think they get a bit of abuse there. Especially in this situation. I would not want to be a police person in our lockdown. I can't imagine how much abuse you cop per day. VIX actually rising here, 8.41 pre-market. So we're at 28.23. The start of the stream, we were sitting about 27, which is, moving up and obviously putting a lot of pressure. VIX can spike fast. VIX will spike incredibly quickly as well if we get through this Nasdaq low. Let's have a look at the, oh, wow, pressure's coming in now, 10,971. So we are through that bullish hammer on the futures. Nvidia coming in at 3.91. Let's load up a few of these stocks coming in. Not the wrong spelling of Tesla. Let's bring that up. Tesla's still pretty bullish, 6% down. I know that seems like, oh, it's a terrible day, but you got to remember, put in perspective of we were at the same point on the Nasdaq and Tesla was 337. This is the hype of the batteries. Wow, that battery event better make it for everybody. Wow, it's crazy. I really do find it interesting. The sentiment on Tesla is just so strong, but when it gets out, it sells off so hard as well. When people have fearful right now, just not enough fear coming in. But when it sells this one. Let's check out one of its competitors. Check out Nikola. Then we'll have a look at Disney pre-market, see what's going on there. So Nikola is putting the pressure on low. Actually not down as much as you'd expect. The base here is still at 29 level for anyone that likes trading this. Very strong 29 level. Gets through there, God, you'd be looking at all the way down to 20. It will gap fill fairly fast. It has very little structure under that point due to the fact that it rose so quickly. So yeah, 29, you want that to hold on this thing. Let's load up Disney. Check out that. So Disney is pretty much not really moving that much. Makes sense. Why would it? It's fairly defensive. It's obviously not in the industries that are being hardest hit. So I like Disney off this 127 zone. Previous kind of resistance, support. I still like it there. I specifically love it at the 120 itself. So the 127 is good. The 120 is a super buy right now. You haven't had this retest in ages either. That's a very good zone. I'm going to set an alert for that myself actually after. I keep forgetting how good that zone is. So 120, previous resistance structure throughout the board. Obviously it busted through it very quickly during the crisis, but I love that 120 zone for this area. Will it get there? We don't know, but you know, there are headwinds for Disney as well. Disney's not going to have it all easy. They've got a lot of problems with every part of their business and cash flow. And we've tested, of course, these previous resistances, previous supports, which should have acted as more of a resistance. I wouldn't have expected to see such a weak sell-off from this point. So this might be a bit of a false breakout here. We might see further selling in Disney. I'd love it at that 120. Apple, Tesla still tanking. Yeah. Apple is the one that you want to be looking at from real sentiment in the market. Apple is, of course, the big daddy. It's the biggest stock. It's the one that pretty much looks very similar to the Nasdaq. We're trading at 108.85 pre-market, down 3. Whew. Down 3. I mean, this really, a close this low fully exposes a move down to 100. I mean, you know, these are big deals. Like we get under 110, we get in that 109 close level for the day, and all of a sudden we're really putting pressure on this 100. Usually markets fill the zones. So if you've got if you're kind of holding, I guess you want to hodl and you want to hodl hard, and don't look at the charts for a few days, because that 100 is certainly open as soon as it gets under here. Nas breaking hard makes sense. Hate pre-markets though. I do hate the futures market. It doesn't mean real volume. Always remember that. If you're a beginner trader, it's all about the closes on the markets. They mean the most. The open means nothing, unfortunately. The close means everything. We've seen a lot of closes that have been red over the last week. Buying hype in the Asian session generally, and then selling at the end of the day. Now we've got huge selling in the Asian session into the European session, and then, well, today we'll see. But this NAS is certainly going down. Gold and silver charts, wow, says John Madden. Good name there. We'll have a look at the gold silver charts again. So obviously gold here, we've got on a weekly, that's why it's looking kind of crazy. So basically, look, we should be seeing dollar index strength. Got Bitcoin coming down here a little bit. Obviously, we'd like to come down to this 10-6 structure down here. Makes sense, it should find some support. There's a lot of pressure on gold right now. We're trading at 1934 on gold. Double rejection here, now new low. We know what we were talking about before. That's a fairly significant signal. 1920 has been a very strong support line for this. We're going to intersect possibly the 50 EMA on the daily. So for gold bulls, we need it to hold. I'm telling you, it gets through this zone and close the daily under here. Ooh. 1863, possibly a way shorter period. I'd expect the dollar index to be cranking at that point as well. But for gold bulls, I don't think long term there's a problem, but for the short term, obviously 1920 into this 1916, this zone here is super important for gold bulls to hold. Daily closes, we have not had a daily close under the 1912, and specifically we haven't had a daily close. Notice here, these are all buying accumulation points all the way through here. So we get through that point, very similar to what we saw in that Bitcoin before. What do you think about banks? Do you think they are holding? I think banks are usually a terrible investment. Historically, what we see in low interest rate environments, if the interest rates are going to remain low, it's very problematic for banks. They'll have to cut a lot of costs, really. Here we've got the markets, the US 500, and of course the Nasdaq side by side, both putting pressure on the low, specifically the Nasdaq superior pressure on the low here. Yeah, so with banks, if you look at some of the banks in the Europe Union, they suffered incredibly strongly coming into the, or actually over the last decade. They did not give good feedback. Now, of course, Buffett's bet on them. He's bet on Bank of America, JP Morgan, that kind of thing. American banks are a little bit different. And also, I think the Fed is kind of saying, well, look, we're going to try to raise rates. We're going to try to not make the mistakes of Europe. Europe stuffed the banking system in terms of the bank's health in the stock market. What's the topic today? Bearishness. Says Aditya. Yeah, bearishness is the topic of today. Jacob says, see you at Nasdaq 10,000. This pump is done. Look, I don't disagree. It's a possible open. I still think, though, they'll be buying support here, Jacob, at this 10.4 level. Remember, channel structure is there. If you're talking about from a pure, what's the next potential move? Well, when you have a move down like this, often the move will be kind of created again the same distance. So you often see like a distance move, and that's where you're probably getting that 10,000 from. The same move from the high to the low, so from the structure point to the low, often happens again. That puts it straight into 10K. I think it's super done at 10K though, because then what you're doing is you're entering pretty much bear territory in terms of a official bearish correction. We've got here 12,400 down to, of course, 10,000. You're looking at pretty much over 20% an official bear market. Probably be like one of those short-lived bear markets. But yes. Buffett sold all the banks, but Bank of America, yeah, he obviously likes Bank of America. Jacob says he'll cover me. No. 10K is not out of the question, Jacob. Not out of the question at all. I just think structure-wise, you're going to get that 10.5 hit. And then if you get through here, 10.5 hit, and then after that, the 10,000. Why am I just using round numbers? Well, it's just where previously it's held through, and it makes sense to hit those zones. TA is showing those zones are potential. This is going to go higher. Idiots shorting at these levels. Yeah, I think, look, shorting the market is always a difficult thing, Joe. It's not easy. It's not easy. Buying is easy. So if you want to buy quality at good levels, that's fine. And this is certainly a good level right now. There's just two other good levels that could be potential. After that point, though, I think you'd be foolish to think that the market is going further down, because there is still a whole bunch of positives to come in as well. We're putting a huge amount of pressure on here, 17 minutes away. We've got a new low again, 10.923. Let's go to the weekly just for a second. I just want to show you something. If we took the whole move, we've got to put everything in perspective during these times because they obviously look terrifying. If we take a fib retracement of the whole move, and I do use fibs to get extensions and of course retracements during these moves, down to the 10 kind of 250 area is only a 38 correction of the entire move on the Nasdaq. The 50 correction, so remember what I say before, I said I love picking up things in this zone. In a normal market correction, you usually see it come down of the last move to around this level in between these zones. Now, in this case, I can draw the fib this long because it was basically vertical. So I think that this is certainly a potential level and a potential zone. But again, We've seen that 20 EMA on the weekly hold bullish aggressive moves. And I think it could overshoot and go a little bit lower, but overall we should see fairly strong buying pressure. The future is in tech. We cannot deny that. I think anyone that denies that there is value in tech coming out of this, we've effectively raised the cycle. We've made the cycle, basically run 5-10 years. Companies that were already dying are dying faster. Jbot says, man, this guy is giving out knowledge for free. They're so-called gurus charging 4K for this. Y'all people got to donate. Appreciate that, Jbot. Look, we do have courses, man. Like I do have a course, obviously fxevolution.com. I'll plug it, and a community. But overall, look, the main thing is, why not share a bit of the things you've learned? I've made plenty of mistakes. Don't worry about that. And might as well share some of the things that I've learned through that time. No worries. Gold looks like a triangle, so I assume you're talking about potentially a descending triangle. Yeah, it could be. Certainly a lot of pressure on that 1920. Dave says, because Powell did a bad job yesterday in answering questions, has he ever done a good job? He basically kind of says it how it is. He's like, things are bad, things aren't that great. Things are bad, things aren't that great. We'll use some tools. He never comes out and makes the market happy, but the market usually buys into his talk. It's almost done it every single time and then sold off there. Why so bearish today? Haven't seen any bad news. Just because Powell basically bought out this thing and he's like, look at my chart. We think that interest rates might be going up slightly earlier. The market really had this expectation of interest rates low for years and years and years, as in 8 years was some of the expectations. That's on the high range, but definitely 5 to 6 years was not out of the question. Now they're saying 2023, we're expecting to start hiking. And the market doesn't like that, especially growth stocks. Siddharth Muli says 3850 zone is in play, the dip to end all dips. Look, if it comes back to those zones, it's definitely good levels. The SPX may not come back as hard as the NAS though, because the NAS ran very, very aggressively. Obviously, this will not hit all markets. So S&P 500 could be safe from some of that. Let's just load up that S&P 500. We're 14 minutes away from the open, by the way, everyone, which is pretty damn exciting. But yeah, if we look at the S&P 500 move up and then we draw, let's say, the fib of the whole move, the fib pullback here, 38,250, I don't think that's going to happen. So 38,2, 3,000 is possible, down to the 2,880. Oh, I don't think so. Here, though, we did have a pullback and a bit of a sleep before, of course, it moved up higher. So I think this is probably the more realistic fib. I think really, for me, though, 3,200 becomes the zone. I really like 3,200, the 20 moving average, the previous resistances on the weekly, the structure through this area, the pivot on the monthly. If we have that pivot chart, where's that pivot thing? I don't even know where my pivot went. I'll show everyone the pivot that we use in TradingView, or that I've kind of been using. Don't always use, of course, this software, but I do for streams because I can. So here's the monthly, weekly. It comes in like crazy and you think, my God, what am I doing with this? But you can set all of these off. So we'll just get rid of all these things. We don't want to use dailies. You can use dailies in Forex trading, but don't use them in stocks. It will not help you. You can obviously use weeklies if you do want to. I'm not going to in this case. Oh, I don't actually want to do that. I want to get rid of these damn things. And we want to get rid of centrals as well. So we'll get rid of these too. So if we have a look here at monthly pivots, the thing is on the S&P 500 or the Nasdaq, specifically the S&P 500, so let's load that. The pivots are quite well respected throughout time, especially S2s and R2s. Central's also a good pullback zone. So we've already hit the R1, and then of course, I'll go to the monthly, make it clearer to everybody. So we only have one dot. So we've already hit, of course, the monthly R1. That became the resistance around the 3,600. We've got a support here at the 3,165. Now, if you load this over, and this is the problem with pivots, you have to load it to the SPX. You'll notice that the monthly S2 is at 3,200. So always use the real market. Never use the futures market when using pivots. You want to use the real opens and closes because that's what the big guys use. They don't look at futures market pivots. Jacob says, oh, thanks, mate. Thanks for the US $4.99. That's probably like 100 Australian dollars, isn't it? Thank you for your knowledge. All I can afford since I'll probably lose my bum on short at some point today. He's laughing around. Thanks, mate. Appreciate that. I do. Big shout out to you. And obviously your American dollars, much better than our Australian dollars for quite a few years now. So we're 11 minutes off open. Let's have a look around the markets. Let's look at the VIX. We're finding a little bit of buying pressure coming into the futures. Obviously, we haven't seen a close confirmation low yet. The first couple of minutes is going to be the key there, and that's important. Luke says, Tom here with another video. I can't get that out of my head. Thanks, Tom. You're awesome. No worries, dude. No worries. Yeah, I need probably a jingle. What do you guys think of the whole simplifying the markets together idea? Obviously, I want to make this as inclusive as possible. I really appreciate the community. You know, one of the things that I did a long time ago was I actually streamed 10 years ago. Okay, and I had 10 people watching me. And I remember I really enjoyed it, but it just wasn't worth it. Now I'm at a point in my life where I can afford to do this and you know, see where it goes. But at the same point, it's really, really humbling to see so many people in the room. That's really great. So I have no problem sharing as much as I can with everybody. We will look at Beyond. I've been asked quite a few times. All right, J-Bot, you know you can leave the stream on. Just mute me for a bit there. 109 now for pre-market Apple. Let's have a look at Beyond as well. What are people so crazy about? That it went up, or that it's this is the one, yeah, Beyond. It's the Beyond Meat company. I'm not really too surprised that it went up here. We discussed this on the channel. We had a beautiful structure through this point. Is something else happening that I don't know about? I don't think so. But yeah, we discussed this literally on the Monday bell. Talked about this point really right here. 137. Previous. This beautiful support that came through. Beautiful accumulation. Volume spikes near the end. Usually showing a bit of buying pressure coming in. And then it broke through with decent volume, which is good. Better than, of course, during this accumulation period. And then bounced up. Thanks, Logan. Appreciate that. No worries. Yeah, I do appreciate and really like the pre-market chat. It's always hyped go into the bell. 8 minutes now to the bell, everyone. Not too long. We'll go through a few more potential shares. Basically, Beyond's about to hit its resistance, so I wouldn't be too keen on that unless something's happening that I don't know about. But I really do like the base. Appreciate that. Yeah, 162 resistance, strong move. Difficult to find out whether this company is really worth it or not as well. Obviously, it's been in for a while. Does it meet my rule of being over 5 years? I'm not sure. Hasn't been in the market long enough. Came out of the gates really strong. Similar to the snow, came out super strong, then busted down. That often is the way of the IPO. Often is the way of the hype. Sinister Pigeon Boy, £3. Well, thank you very much, mate. Appreciate that. Fist bump. Thanks, mate. That's probably like $15 Australian. I appreciate that one. Yeah, let's look at a few others. We'll look at Intel coming in as well. I know a few people are in Intel. It makes sense. I know that it's very tempting to buy the Intel, but it is finding good accumulation support. So basically, Intel have been behind the game for a little while. With these chip manufacturers, they really sell off hard into a lot of news. And obviously, if they're not kind of ahead of the game, they don't do well. Right now, AMD is in front. We'll look at AMD. I need to look at that stock during this session. My goodness, that had a very bearish sign on it, AMD. Forgot about that one. So we had the head and shoulders over here. You can see it even on this weekly. Left shoulder, head, right shoulder into news, busted down. Right now we're accumulating at a base. Let's now load up the daily, have a quick look at that. So daily overall, it's still looking like a very nice base. I would not be concerned if I was holding this stock. The only problem I have with holding this stock is you could be sitting here for a long time with nothing much happening. So it could sit here for ages. If you don't want to be someone that sits in the accumulation period, wait until it breaks past this point up here. Basically just put a horizontal line here, set an alert, and unless it's above 52.62, you don't care. Why is that? Because we're accumulating in this base. Yes, there's a percentage lost here, but when it breaks through that, there's a big gap fill. Notice in the TA, we've really got a huge level between the 52.62 and this 57 zone. Previous SUPs all the way through here. So much SUP. Now, obviously, there's a couple lows here, but this point here is going to fill quite quickly. So for me, Intel is just chill, put your alert in, wait for it. Ideally, we see a break, come back down, retest, boom. It could sit here for a long time in accumulation. It's not unknown for a chip manufacturer to sit for a long time. Look at the previous sell-off, kind of chilled around for a while. Obviously, back in 17, which is what I remember, Intel did nothing. It just sat there for an entire year. I remember this. Ugh. Just sat there doing nothing. So right now, that's what I feel like on this one. Sol, all right, man. All right. You're not going to... You won't get me to usually look at stocks because of that. So definitely slow down, bro. But, all right, one sec. Got to mod you, man. Got to put you in timeout mode. How do I do that? I don't even know. I'm going to have to create some mods. Message me, support@fxevolution.com, and I'll set some mods up. Can't be having that going on. No good. Now, I need to make sure I spell your name right. Niran Maru, I hope. SGD20. I love that place. Singapore, amazing. So thank you very much for the donation there, mate. Appreciate that. We'll go towards some coffees for sure. That's what I pretty much spend all my money on, coffees and investments. But yeah, Singapore is a great place. Love that place. If you haven't been there, go there. Eat the food. The food's amazing. It's cheap. The zoo's great. Love the zoo. Really good. So here we've got Tesla 4 minutes into the open, 5.68 down, 416 pre-open. Now we mentioned in Tesla, we go down to the 4 hour probably here is where we have to go. We have only real buy structure is 388 area. This around here, this 388 area is the strongest buy area. We do have a 20 and a 50. I don't think it cares about those moving averages right now. So we only can go with the structure zone, and the structure zone is straight on here. Previous little bit of resistances over here, little bit of supports, little bit of supports, little bit of resistances. Overall sentiment should be relatively bullish on Tesla if we hold because of the battery day. I personally feel like it's a buy the rumor on the battery day and sell the fact, but I don't know about anything about the battery day. I do not know how strong that battery day is going to be. Singapore is just a big shopping mall, says Bobby. I don't know, man. It's not a big shopping mall. You can go to Malaysia too from there. I enjoyed it. Maybe I like shopping too much. But look, I definitely enjoyed it. Yeah, Tesla is beating the market purely based on hype right now into the battery day. If you don't know about the battery day and you're not sure where it is, literally just search that beast into Google, battery day Tesla. You can even use that code. I'm sure it'll come up. And then, of course, it didn't come up. So September 22, 2020. That is the day of reckoning for Tesla. We'll probably be live streaming for that day just to have a look at it. Let's do a quick pre-market here. 2 minutes before open. We're about to hit that bell. We've got the VIX up. We've got Nasdaq down 2.85. S&P 500 down 1.75. Dow coming with it. If we notice there, that quick highlight, the Dow is showing a pretty bearish signal. Load that one up. Gold, silver, everything down. Dollar index strengthening a little bit, but not as much as we'd expect usually in a sell-off like this. Bonds overall up, 10-year, Of course, 30-year makes sense. You sell a market, you're going to get the bonds moving up. Are bonds cool? Not really. What about copper, our lead indicator in 1 minute into the market coming through? Let's see if copper's selling off anymore. So copper sold off, bought back. Remember, when it's in this range, we're not seeing crash-like properties, we're seeing correction-like properties. If it breaks through this channel, 2.95, 2.8 is pretty much expected. We'll go back over to both the kind of dual split screens here. Let's load that up and have a look. We just talked about how if the Nasdaq gets under this zone, 10.5 is open, 10.5, 10.4 based on the channel. And of course, the distance of the moves predicts up to 10,000, which is where we start to get into that fib proper correction territory. That'll be bear correction territory. So I'd expect a little bit of Congress or something to pull in. Gemin, thanks very much. 10 odd coming into the open. Money for your coffee mutual fund. Guys, that's good. You are paying for a couple of days worth of my coffees here, so I appreciate that very much. Okay, let's go down to the smaller time frames, see these opens come through. Go down to the 1 hour on the US 500, and we'll go down to the 1 hour on the Nasdaq. So we're open, ding ding. I'm going to get a bell sound for this channel when we open up. And basically we're off to the horse races right now. So let's see if the Nasdaq holds these lows. First 15 minutes to half an hour will be key here to see if we can hold these lows. We should see buying pressure come in almost immediately probably. And then maybe we'll get the sell off after a few minutes. Usually you do see a bit of dip buys come into the day. If it starts selling off immediately, that will be very interesting. 2.53 down the Nasdaq. Let's check out some of these stocks coming in as well. We've got Tesla down 6.51, putting further pressure on, basically down to the 411. We checked Tesla because obviously it shows sentiment. Sentiment is important, and if that stock starts tanking, we're basically losing a lot of retail sentiment as well. Big crowd in here tonight, 623. Appreciate each and every one of you. Thank you very much for checking out the channel and live sub. 28.91 on the VIX, so up even more, up 11%, so well done to the VIX holders. I know there's quite a few people that trade this one. We obviously made a video about volatility increasing. Even if you'd bought it at the start of the week, you're now up on this position, which is good. Apple coming in. Now, where did Apple come in? So it came in at a 109.27. Ooh, all right, so we're bearish on the Apple right now. Obviously, that was a super disappointing event as well. I'm not even going to buy anything in that event. And I was planning, I wanted a new Apple TV. I wanted to buy that damn thing. Not gonna get that now, are we? So 109.22, put some instant down pressure there. We're open here. And I guess if we get through this zone, the structure, the formation, everything is very bearish. We're basically looking at that 100 on the Apple. Let's have a look quickly at the daily there and just talk about how big that run has been. So the run has been incredible for Apple off, of course, the lows. It makes sense to pull back, draw that fib back up on this one as well. I'll answer some of your questions coming through right now as well in just a second. Just want to cover a few of these stocks. So we're not even in the 38.2 fib, but notice the 38 and the 2 and the 50 of the move fall into that 100 bracket. I like that range. I always like this range. This is the range that I always look at when it comes to big fib pullbacks. Okay, a couple of questions coming in here. Not sure on what events are happening this month. Well, Tesla battery day is one of them. Other than that, pretty much check out your forexfactory.com, check out the economic calendars. Make sure you look at marketwatch.com as well. Every week, check your economic calendar on that one as well. Michael says, why don't you go onto a lower time frame for the focus look? Yeah, we'll do that on the indices in just a minute, Michael. The only reason I don't go down too much is I don't really believe that trading 5 minute, 1 minutes are really good for you long term. I've done that. It's just not great. And when it comes to staying in the game a lot longer, if you can get into swing trading mode, you will find it so cool. You do like an hour of analysis a day. That's it. So easy. Is triple bottom a thing? Certainly is. Absolutely. Certainly is. So we're seeing that buying pressure come in immediately here. If you go down to, of course, a 15 minute what are we going to see? You know, I can say, oh yes, these are candles that are looking bullish, but I do prefer to stick on the slightly larger time frames. I guess that's my analysis of it. I used to sit in the 1 minute chart, guys. Thoughts on Nikola? I think it's at the base. Obviously, it's at a strong base technically. I think that is a trading stock. I'm terrified of it to own, but yes, it's a trading stock. You can certainly look at that. SP 500 negative 1.6. Yep. And Nasdaq down more. Yeah, of course. Growth stocks are getting hit here. Thanks very much, Ola. Appreciate that. You like my accent? That's nice. The market's still looking bearish at the moment. A lot of opinions I've heard have said this is still a lot of room for downside in September. Most people on YouTube are incredibly bearish. It creates views, of course, to be bearish. But the facts are that long term, you should always be long in markets. There is further downside here. I think the Nasdaq definitely has downside there, the 10.5 and the 10K. After that, though, I very much doubt we're getting lower. That's true. Good feedback there, Michael. We'll definitely look at that. Yeah, Amazon. Let's check at Amazon. We haven't looked at that for a little while. Tesla, still finding a bit of support around this zone as we see the market kind of pull up. VIX is actually moving. Is it pretty, around the same, 11% still. Let's load up that Amazon. Amazon's always a good stock to own. Bezos will take over the world. So we're back at the 3,000 level. Wow, we were talking about this just the other day. We've actually got this 29.33 highlighted. I want it to come back down to this structure. So after this move up, we want it to come back down here. And then of course, if it breaks through this zone, we've already highlighted potentially down to this structure 26. I'm not actually liking this chart. Let me just quickly load up. I'll use this other one. 1 second. I want to get some moving averages there as well. For some reason, that chart didn't have them on there. Let's have a look at the weekly here and see how far away. So we're actually almost about to hit the 20 moving average on the weekly. During the most of the bullish aggressive runs, we have seen that level hold for at least Amazon. Obviously, this period here is a bit of an outlier, but that's due to trade tensions. We get through this zone though, I definitely think that's very, very bearish. In fact, we could go all the way down to the structure. I'd get rid of this because this was drawn when we were looking at this potentially cracking through and it didn't do so. So I guess, yeah, a break below here is incredibly bearish for Amazon. And then you could go all the way down to the 25.50 EMA. Both these levels could make sense. I'd probably put pivots on there. Look at a fib of the last move as well. Probably highlight in that range. Whenever I'm dip buying on stocks, if I've had a move up, I always target the 38.2 to 50 range. So somewhere in here would be my targeting zone. And what you're looking for out of that, if you don't want to just buy randomly a dip, is you want to see a lightning bolt movement. You basically want to see a trough, a peak, a higher trough ideally, and then a breakthrough. Otherwise, you get some kind of accumulation like this at a zone and a breakthrough. They're all good, very good structural elements in buying up. You can also have bullish hammer, and then of course the market going higher. That won't be as strong as structure elements. Market structure is the best. Candles are okay. Does today's correction open up a wide range for Nasdaq, which can move down to one at the 9,800? Kewell, yeah, absolutely. We've got Nasdaq opening at a point now where you could see it literally. If it cracks down to late today, it opens up 10.5 very, very quickly. Remember, markets like to gap fill zones, so they like to move through a zone into the next point, next area. Wow, you guys are being really nice tonight. Siddharth says, Siddharth Muli says, pair a kookaburra sandwich with your coffee. Kookaburra sandwich. I could eat a kangaroo, mate, but I don't think we're allowed to eat the kookaburra. For anyone that doesn't know, kookaburra is a bird in Australia. It makes a crazy noise when it laughs effectively. Can we check out PayPal? Yes, we can. PayPal is obviously a very strong stock at the moment. Oops. Got to put it in properly. And it's had a massive run on it. Intel is a good buy, get monthly calls. It's definitely at a good structure, absolutely. It's in that structure zone. Just remember though, it can sit there for a long period of time. But yeah, it's at the right zone, no doubt. All right, let's have a look here. Let's get a fib on this. Whenever you're looking at these super moves up, you've always got to fib them. You just have to fib them because you know that when you've got the sell-off occurring, it needs to usually come into the 38.50. So I guess 38.50 is still it. So you got that 160 high, and then of course the 150 is possible. I kind of hope that doesn't happen for you. I assume you're already in this long, but yeah, a correction phase. If we get through that Nasdaq shorts down, it'll put huge pressure on these levels. 38.2 fib into this point, very, very possible. Weekly is probably a good point to look at here. If we go down to daily, what are we going to see? Well, we've almost got a 20-50 cross here on the moving averages. That is usually a bearish sign. We do not have that yet. We've already bounced basically below the structure. Previous resistance acted as support, and today we've opened low. We hold low, that's negative, unfortunately. That's negative into this 160 previous support structure around this 38.2 fib. So if we hold low here, I do think that this zone, this little bit of an area in here becomes very, very interesting. You may not want to hear that one though, I think, if you're holding that long. Siddharth Morley says, I just pray for VIX volatility. I think if you are an active trader, yeah, you certainly do. If you're an active trader and you want to see large moves, then yeah, you want VIX volatility all the time. $77, 10 US dollars, 50 Australian dollars there. Mate, that coffee with a superior scone. NVUS, your thoughts. Thanks for your service. Well, of course, I have to answer your question now, San. We'll do that. Thank you very much. I like scones. So is NVUS, just quickly, is it Novus Therapeutics you're looking at? I assume it is. So this stock obviously came off with a massive hype train. Let's have a look here at the weekly. So is this, what is going on here? Is this just massive volume that came through due to an announcement? Let's have a look at the news here on this trading view. If this stock came through and it's just based on hype in terms of an announcement, I'd have to look at it fundamentally, mate. If this is the one, I'd like to answer your question in more detail. Send me an email on this one, man. Yeah, I need an email on this one because I'd actually have to break down a few things. Obviously, this is a hype. Basically, when you see a movement like this, it never usually holds that kind of giant movement. That's a big hype anticipation. You usually see 3 to 4 days of selling and then structure formation. So the idea here is you get your hype kind of coming out. It obviously has that massive kind of rotation. You have your further day of selling. You have your further day of selling. Usually it's a 1, 2, 3 kind of event. Then you'll hopefully see structure formation through there and a bit of accumulation. And the idea would be it would sit there for a while and hover and then break high. We can look at it again next week, but yeah, you need to look at what the fundamentals are. Because this stock, how can you look at the technicals here other than to say it hit a previous resistance when it went on its last kind of big news-driven event? That's all I can really say there. Look, last time it had a big news-driven event or something like that, followed by obviously another negative news-driven event that pushed it right back down to where it had been sitting for ages and ages and ages. These are dangerous plays. That's why I don't really cover them too much on the channel, but I do hope you're doing all right there. We will have a look at Moderna because I know it's been doing that thing. Nicola is up. Good work, Kawa. Very nice. Moderna here is finding a base. This sector was a bit unloved. I mentioned that about a week ago. Came off, it's a really nice area down here at this 60-58 zone. So I like that. Right now, showing some strength. Unloved sector, deserves rotation into it. Obviously, this stock here has been the hype train and then the not so hype train. Right now, are we seeing anything in particular that shows us strength or weakness? Well, I think this is the key. We close this weekly bullish. That's super bullish for this stock because we've got effectively a very nice gap pattern up. Oh, yeah. That's nice, actually. Sorry, 1 second, everybody. Just loading up something for everyone. Now, does anyone know what this particular pattern could be? I'm just loading it up on another thing so I can show you it. Here we go. Oh, and I've lost everything else. All right, so there we go. There it is, the morning star. This would be pretty sweet on this particular stock on the weekly. So I like that quite a lot, and hopefully it does what you need it to do. And now I've lost everything that I had. 1 second. Lost my chat. There we go. Got it back up. All right. So yeah, that's very, very bullish, that kind of signal. If you ever see those patterns, morning star, evening star patterns, very, very, very good. Always worth checking out there. And I do like the movement there, indeed. All right, so let's go 15-minute closes now coming into the markets. We're holding the low here on the Nasdaq. We are holding the low. We're still finding some buying pressure on, of course, the US 500. We expect rotation to be a little bit more bullish in the US 500 than the Nasdaq overall. Let's have a look at the heat map screener. Thoughts on snowflakes, ticker snow. Michael, we covered that one a little bit before. My thoughts, these IPOs come in super hot and then they're super not. A move of 100% will not usually hold. It might go up and down, but overall, look at Twitter, look at Facebook, look at Snap, look at any other giant IPO that's come into the markets. They do not hold the hype and they really burn you for a couple of years. Copper up, that's good, Michael. Yeah, copper up. Remember, copper is a good reflection of whether we're going into crash or correction phase. And if copper is still bullish in terms of demand, then that is incredibly bullish. So right now, copper's bullish. You know, it's still looking good. We're obviously testing potentially this high range area. That could be showing that this is potentially the hold zone. Now, what would we want to see from the Nasdaq here? We want to see it cracking this 1200, so 11,200 zone, sorry. If it broke through there, that's kind of a bullish signal back up to the highs. Right now, that's where we are. On this 1 hour, if we're looking here on the S&P 500, a 33.57 break above there is fairly bullish back into, of course, these 33.86s. So there is some importance here to the bull and the bear side. Day close and end of day is going to be the key to the markets. Algo's buying at support because the market's not ready to fall. Yeah, potentially. I mean, we're obviously going to be buying this zone in terms of people will see this as a great opportunity. The real question becomes whether we have that initial little kind of spike up followed by the sell-off and then the fourth touch test. I still want to see this for the next couple of like at least 15 to half an hour and maybe even another hour, because these markets have historically been very bullish in the morning and starting to get bearish into the afternoon when they open. Good day shorting the Nasdaq. Short squeeze Nikola. Nikola is a crazy, crazy stock. So right now we're seeing a bit of buying pressure come in. We're only 2% down. The Nasdaq was 2.5%. Hashtag sector rotation. Yeah, absolutely. Tesla good entry was 200 pre-split, said Shane. That was a super good entry, Shane, during the crash. Yeah, of course, but you're not always going to see that. Just remember there is a fair bit of not loved sector in terms of when we think about this particular stock. So obviously we saw an uptick in this stock, very aggressive uptick in this stock over the crisis period, and then it had all those massive sell-offs. This is what happens when you go into a hype stock. We were talking about snow before. This was super hyped and then had big sell-off events. Now we're seeing it come into some form of reality that's actually having to prove itself. So that's why Moderna is doing that. Check out Apple now, because Apple is, of course, a good teller of sentiment. We'll look at Tesla. So Apple's still holding down under the 110. Very interesting. Have a quick look at Alphabet as well. We'll use this one. All right, so Alphabet here is actually still selling off fairly aggressively. This stock has been an underperformer for quite a few years. Certainly has been an underperformer for quite a few years. So we've got the structure formation through here. It's sold off straight into the 1478, 1480 zone. This is a very strong hold, so we should see it hold this zone. If it breaks through here all the way back down to 1384, been looking at getting more Alphabet. We'll see whether they can turn it around in their business. Obviously, I'm YouTube streaming, so I've got to support the service. But yeah, I would like it to get back down to that range. Let's take a fib of the whole move here. Again, we're looking at fairly deep pullbacks if these things happen. So we want it that 38.2 of the whole move to 50 fib. Where would that put us into? It would put us back into 1450 into 1370 kind of zone. We've got a 200 moving average on the daily in here. Where's our weekly moving average? Weekly 20, it's hitting right now, so it'd be a 50. Yeah, I like that down there. Like 1400, something like that in this. Look for the structure of the market to come down, find some form of support, make a new high. Ooh, that wouldn't be bad at all. And then hopefully they can turn around their damn business, because right now they haven't done anything for years, in my opinion. Do you think the Fear Greed Index is a good indicator, says AW? Yeah, I absolutely do. I think the Fear Greed Index is a good indicator. The one you're probably using is this one, I assume. So let's have a look at the Fear Greed Index in Google. So the one you're probably using is the CNN one. Look, there's nothing actually wrong with it, technically. I mean, it's just data at the end of the day. If you have a look through the Fear and Greed Index now, of course, we're neutral. We wear multiple greed indicators. You go through these, yield spread, junk bonds, whatever. Doesn't matter, because extreme greed is always going to show right now because of the Fed. CBOE 5-day average put call ratios. We've talked about how that's important. Notice how coming into September, we had the euphoria. We had incredibly low amounts of puts to call ratio. This was a super key point. Now, we actually saw a point where we had positive upticking VIX coming into a market that was also going up. Very rare. And when that happens, usually it's a very good sign to get the hell out. So put call ratios are a very good idea. When people don't think something's going to happen, it usually happens. If this continues to go up and we get put call ratios back up in high zones, e.g. they get up to probably about this 0.8 kind of zone, 0.8 in particular, I'd be saying that's the end of the short. Why is that? Because at this point, they've trapped lots of people into puts. So now they've got to make money off them. So right now we're sitting at a 0.6, probably 0.6 to 0.7 zone. We don't want it really above 0.8. And of course, 1 would be a very good signal that we're off the hook in terms of the market will most likely continue to bull. Notice, of course, last year, October, we had around that 1 period and the market went up off that period as well. So yeah, right now that put call ratio is going up, and that is important. Other indicators here, market momentum, don't care. Stock price index, it's okay. Market volatility, yep, sure, that's the VIX. Of course, that's important. Stock price breadth is pretty important. I think we're getting pretty crazy on the breadth levels. And safe haven demand, whatever. So fear greed over time, this is actually pretty good as well. This is like their little oscillator that they form here. It's a good thing. I'll chuck it in the room. We'll just go to CNN. If you hate the website, I understand. But over here, this oscillator is not bad. So every time we've got up near that 80 zone, we've generally seen some form of correction. And of course, start of this year, even if we didn't have the crisis that we did end up having, we were still in a super overbought, super greedy market. And whenever we're in a super greedy market, you usually do see corrections. You can pretty much put this oscillator against your chart. You'll find it not bad. Not bad at all. It's certainly worthwhile looking at. All right, let's go back over to the market, see what's happening. Buying pressure still coming in here. US 500 now only down 1.22. And the Nasdaq down 1.7. So a bit of buying pressure coming in. Not unlike the first hour for this to happen. A lot of stuff flying. Yeah, things are moving up, Cam. Makes sense. First hour has been generally quite bullish. The US institutes the withholding tax. Yes, it does. Absolutely, it does. There we go. I've got my live actual stream back up for the chat. Tomorrow is quad witching day. What effect do you think that will have? It's a very important point and could be why the market is coming down. Now, does anyone know what quad witching day is, or witching day in general? I'm going to bring this up for everyone now. Does anybody know what that is? Because that's actually a pretty interesting point, and you should have these options expiration calendars open if you can. So here we've got Market Watchers one. We'll use this. So here's a options expiration calendar for the year. We'll chuck this in. Can I even put this in the room? Let's have a look. Yeah, I can. There you go. So is that sent through? That should have sent through into the room. You can check this one out. So these are all the options expiring, holidays, etc., etc. So September, we've got 18th is actually options stop trading, and then we've got options expiry and all of that. Now there's a whole bunch of different options that are going to be expiring on this day. So if you have a look at the quad witching day event, basically, it refers to a date on which derivatives of stock index futures, stock index options, stock options, and single stock futures expire simultaneously. So if you have those kind of days, obviously there's a lot more at stake, and often markets can act weirdly into those kind of points. Yeah, so definitely worthwhile checking out options expiries. Third Friday of September for the quad witch. Yeah, I'm not sure if it's coming right now. For a dividend investor, would you just buy the well-known strong companies? Yeah, I mean, basically that's the point. You buy quality cash flow companies. You always want as much as possible in terms of quality during these crisis periods. Cash flow is the most key important thing. And of course, that cash allows opportunity for the company to buy even cheaper companies and to grow like very, very large. Obviously, that's what happened out of the GFC. It will be what happens again. Carl, yeah, I've heard of it. I haven't looked at it specifically, but yeah, I'm sure it's probably okay. It probably has some good elements, but I don't know that person at all. No. They expire generally at the end of the day. Nvidia, yeah, we can definitely look at that. So Nvidia is a lot of hype and anticipation. Obviously, the new cards are coming out. I think I'm going to miss my pre-order on those cards, actually. I think it just happened in Australia. But yeah, overall, Nvidia has been an amazing stock. I wish I had more. Amazing stock, probably a little bit overbought. We're down 1.71, which is a lot better than we were down for this potential stock. Let's have a look here at the daily. So still finding some buying pressure. We've got a lot of structure starting to form through here. It's pretty much the same story that we're seeing on every single stock right now. Apple's actually one of the weakest in terms of the big tech that have gone very bullish in sentiment. We have lows here at the 468. We've got a 50 EMA. It is a strong buy zone, support zone area. If we get through there though, you open up your structure all the way to 425 previous resistance acting as support. If we go over to the weekly, my major concern with this stock right now is this sell-off event that happened, the fact that it's hyping still here. We've got insider trading going on this in terms of the CEO is dumping a whole bunch of stock, and we're so far away from the 20 still. So that 424, 420 structure zone is probably where I at least expect this to come back to. And I'd always draw a fib retracement of that move as well, just to have a look to see whether that would be a good zone. 38.2 right around it. 38.250, remember that's kind of the key area that you want to be picking up zones. Very, very nice there on the Nvidia though, for anyone that's been buying this stock off the crisis. I think it's a good stock to own long term. It's got a lot of very good potential. Here's my competitor, is he? Oh, look, I think that there's a few decent people on YouTube. Competitor or colleague? We'll call him colleague. I hope one day actually to get together and maybe have a bit of discussion, do a bit of cross stuff with some of these people. So really interesting to get everyone's opinions. I'm 100% Aussie accent, no Kiwi accent at all. Yeah, if I was Kiwi accent, if I said fish and chips, I certainly wouldn't be saying it that way. Let's just say that. They say like fush and chips, fush and chops or something like that. Top 3 dividend stocks. Oh, well, see, I mean, I'd be coming for Australian stocks there because we have franking credits. No one knows what a franking credit is in America, but franking credits are pretty much the key to Australian investing. I'll go through it one day, probably make a vid. But franking credits, tax, it's all about tax in Australia when it comes to dividends, and we get crazy dividends off our stocks. If I was to pick stocks right now that I like, I'm a big fan of BHP and Rio in Australia, which are iron stocks. I like them in recoveries. They're already doing quite well though. And another stock, I certainly wouldn't be looking at I hate Telstra. If anyone from Australia is still out there, Telstra sucks. And they've got such structural problems. But I'd probably be going with, right now at current price, I still don't mind some of the defensives like WES, but I want WES lower. It's moved a little bit high. But they're all good div stocks in Australia. Joe Shedler, just quickly, Joe, did you get my message in Discord? I sent you one the other day. I know you sent me a private email, but I messaged you in Discord with that. A few Aussies still here. You can see they all hate the Telstra. Telstra is our main popular kind of telecommunications company, and they are completely screwed this year. Do you know that you can't even contact them right now? Terrible. Scary. Can you make some tutorial videos and technical analysis? Yeah, I'll be making more. We obviously do have a course at fxevolution.com that you can check out. But yeah, I'll be making some more free ones on YouTube as well. Now, with Adobe, it's another big run-up stock. We had a look at this one. It was hitting resistance only a day ago. It sold off very hard as well off that point. So we had that 506 sell down into 470. If we go to the 4 hour, we're pretty much just putting pressure on the exact support zone. Remember, every single one of these particular stocks is trading just like that Nasdaq. We have not had a 20-50 cross on the moving averages in so long. This is the 20 and the 50. We have not had that cross for ages. So this structure point, if you're an Adobe long holder, you want to see this hold super long. We've got previous resistance, support. It's a great zone, but if it doesn't hold, all the way back down to potentially these 420s, I think is very, very possible. And it has had a massive run on it. But it's going to trade like the Nasdaq. What I like to do, guys, is I like to look at the S&P 500, the Nasdaq, get a direction, and then go and check out the stocks for that. Now, if I'm looking for just general dip buying across the entire board, that's the kind of thing I like to do. Check out that NAS, check out that SPX, have a look what the sentiment is on those. When you get the kind of go triggers here, go check out your stocks and see them at the levels. If you're in a non-big market environment move, then of course you go into the stocks and you look at those. Here we go. It's a great question, Reke. Hey, Tom, as a fellow Aussie, which country markets do you invest mainly in? I'm from Oz, but most of my positions are from the New York Stock Exchange. Yeah, fair enough. So obviously America has the best market in the world. Shout out to America. The American market has great diversity, it has quality stuff, and long term, you probably bet on the US dollar over the Australian dollar. We have a pretty crap dollar. Basically, I like America. I don't mind investing into China, which may seem kind of crazy. I like specific companies in China. I don't invest in any specific index. I hate their banks, so I don't go near them. And I look also at some of Asia to invest in, and also I have dabbled in a bit of Europe, but generally I take funds in the sectors that I want worldwide. So if I want healthcare worldwide, I'll just take a worldwide top 100 healthcare, that kind of thing. Obviously make your own decisions before going into any of those types of things. But yeah, that's the thing. I select a concept that I like, and then I just invest in that concept. Thoughts on DocuSign? Yeah, I mean, I don't really know that much about that company. I'd have to look into a bit more, but I have seen it. How long have you been trading for? About 12 years, mate. So I came in the GFC. So like many people out there, everyone gets excited during a crash. It's the people that stay around for the next 10 years that that learn about all the other market conditions. But yeah, crashes and big kind of movements like we're seeing now are not normal. It'll get more boring. The key to investment, the key to trading, the key to anything is to always think about the risk versus reward. That's what pretty much every big fund manager will tell you. I've met a few throughout the years, and they all say the same thing. When you start trading 100 million, 200 million, $1 billion, anything like that, all they care about is risk. They don't care about anything but risk. So risk versus reward is very, very key. Tesla's pulling up quite a lot. We were down 6% plus pre-session. Now we're only down 2.5 and we're only 35 minutes in. So the buy and the dip is certainly happening right now. Let's have a look at the heat map across the board. It is a red fest, except for GE, which you should not buy. That is a potentially dead company long term. Overall, though, pretty much what we'd expect. Bigger selling in, of course, the FANG stocks into, of course, some of the other bigger moving stocks. Nvidia's not down as much as you'd expect. That's because it's a bit hyped. Overall, it's always good to come in. If you miss the market, you have a quick look here. It can be good. I don't like just using one day. I like looking at 3-month performance as well, seeing what's happened for the last quarter. You know, it starts to put in perspective here. 3 months performance, all of a sudden Microsoft's only up 5. It doesn't sound that crazy, yeah? Apple's still up a lot. Google only up 4. Intel down. Berkshire up a lot. That's been a good trade, Berkshire. Bet on the buff. He's been doing quite well. Take some more questions here. Did you research about the Chinese 10-bagger we talked about? Metian Dianping. I didn't. But there's always another opportunity, yeah, Raphael. If you did well on it, though, good. And I probably missed it. But I will say that I've got a lot to do every day. Lots of resistance at 11,000 on the Nasdaq. Good short opportunity. I think you said resistance? 11,000, Jacob? Thanks for checking, Moderna. No worries, mate. What's your take on Microsoft? Big company, cumbersome. Good buying around the 200, though, just in general. The question really is where's Microsoft's next growth curve going to be? They have for a long time, they held for nothing. They did nothing for ages. But in terms of, technicals, we can have a quick look at Microsoft. I don't think it's an Apple-style mover. Apple has so many areas I can just see them making bazillions of dollars in. Imagine if they entered all these new areas and they actually started to move outside of some of their core stuff. They have so much profit potential still. Microsoft have profit potential, but maybe not like Apple do. Nasdaq, Microsoft. All right. So Microsoft here, we've found that 200 base level. We know buying pressure throughout this base has been super strong. If it kind of sits here for too long, let's go to a weekly. We'll talk about playing chess with the market. Actually, I'll go daily. It's probably clearer there. So let's say we saw further structure formation here on Microsoft on the right-hand side. We could literally have a head and shoulders pattern. If we saw it do something like this and it stuck around here for a while, 2050 cross gets through that 200, all of a sudden you're looking at a very large short opportunity on Microsoft. But at this stage, pretty much the 200's holding. Previous structure down here at 188. I think this is one of the easiest charts to look at from a structure point of view. If it gets through 200, back down to 188, where it will reach a whole bunch of key points, but this 188 here is obviously a second buy zone in the market for this one, and this 200 super strong on Microsoft. I like both levels a lot. DraftKings is doing great. Yeah, DraftKings is a wild stock. So let's have a look at this one. DraftKings. So I'm actually a pretty big believer in gambling companies and junk food companies during these kind of crisis periods. It's only because in the GFC I learned one thing, and that was that people, unfortunately, when things aren't going so well, tend to gamble a lot and tend to eat bad food a lot. So that has definitely been a thing. Now, DraftKings is certainly moved high. It just broke out strong. This company doesn't really meet my investment criteria, which is 5 years or at least 3 years in the market. I like to see a market go through a few earnings periods, a few books, start to figure out what the hell's going on with that company, have a realistic expectation, and then I come back in and I swoop in and get it at that point if I like the company. But I'm pretty patient like that. DraftKings is cool, but it's pretty crazy. The other ones you can look at is, of course, McDonald's. Been kind of crapping on about that for a while now, and it's been a very strong performer in this market. New high just formed on McDonald's, pretty nice. Obviously, this area here was when I started crapping on about it back in August, and I think it's nice to have held these gains throughout this sell-off. Thanks for my take on Microsoft. No ways, man. No worries, dude. Arjan, it's a good company and it's got some super easy sup holds on it. Let's have a look now at the markets. Let's look at the comparison here. I think it's definitely worthwhile going back over there. Seeing buying pressure here. We're actually cracking here just after the 1 hour close. Go down the 15-minute here. So this is pretty much going to confirm in 5 minutes as a little mini 15-minute double bottom. Now, you'll know on this channel, I am not a fan of the smaller time frames, but it's there. I mean, you've got previous resistance. We're getting through there. We're obviously fine that buying pressure. Possibly Wall Street's playing funny buggers. Nice big buying pressure coming in. Obviously comes back down, finds a little bit of support, bounces off that zone. We'll watch that one together. We've got 4 minutes till that will close, and Nasdaq's still a little bit weaker than the S&P 500 overall. Any thoughts on Ant Financial's coming IPO? Similar take to most IPOs. It'll probably run in super hot. It'll be crazy. It'll jump out of the gates, and then it'll sit there doing nothing for a few years. AT&T, I don't know with AT&T in America if it's like Telstra in Australia, Kawe. So AT&T, let's have a look at the charts on it. It's not a sexy stock right now. Obviously, I don't think it's been doing very well compared to some of its competitors. But if it's like Australia, where it's a company, as I believe it is, which is kind of cumbersome, old, and can't get it together very well, it's mostly just a div play, isn't it? You're not really looking for a huge amount of support is in terms of growth on that stock. Isn't the stock code for this something like this? Or is it just T? There it is. All right, so AT&T is really finding that sup down here. It's similar to Telstra. All these things are coming under pressure. Generally, these utilities come into their own late cycle. So what I mean by that is if you think about cycles in a market, let's say we have bearish cycle lasts for traditionally 12 to 18 months. This time it did not do that. That's the bear cycle. Then we have like the first stage kind of, like start of the cycle. We usually see a whole bunch of growth kind of companies like materials and all those types of things going well out of that period. Usually the utilities and these kind of other structural things, they don't do well till after. They do well very late on in the cycling period. If we have a look here at the GFC, notice the recovery on this stock sucked. compared to other stocks. Took ages to come in. Notice late cycle, arguably 15 to 16 was a very strong year for it. Hit those highs. I just don't like this company. I just don't see why you'd bother with it. There's other opportunities. Just my opinion, but it is at support right now. A few people coming through with T. Yeah. Has crazy dividend. Yeah. It's good for div plays, but it's got not much growth in it. Right at the sup, though. Do you think Airbnb IPO is a different situation because of their current bad financial position and potentially low valuation? Or does it still fall into the IPO trap? Yeah, I think that people are still going to be hyped about it. The problem is they might be hyped about it even though the fundamentals don't make sense. CSX symbol for core civic mass incarceration. US and private companies are cashing in. Are you talking about like some jail or something? What's T? T's the code ticker for AT&T. All right, well, let's go back over. We're about to see the close here of the 12:15 candles. Let's check that one out together. By the way, thank you very much for everyone that subscribed tonight during the session or this morning or wherever you are, depending on the time. I do appreciate that. It's great to grow the channel all the time. So we got the close here at the 12:15, slightly above. It is a clear close above. So that's fairly bullish in terms of these timeframes. Remember, I'm just not a fan of the 15-minute time frame. We'll see how it plays out. I mean, you can definitely check that one out. It's technically a double bottom and it's technically a resistance and everything. But yeah, I just don't like the 15 minutes that much. And you'll start to see, well, you know, the smaller time frames on the indices, you'll start to see that play out when you trade for a long period of time. You get a lot more fake out signals on the smaller the time frame. The larger the time frame, of course, the better the signal is for you. We also expect that the first hour of trade to be ballistic up and then, of course, to see some potential sell-off into the end of the day. The big boys come out to play at the end of the day, whereas the retail herd, like you or myself, we are in the mornings, hyped up and ready to go. Great numbers coming through today as well. Thank you very much to all 518 people watching right now. SPY retest the 200 hourly is falling now. When you say 200 hourly using a simple, I guess you're using a simple. Oh, sorry, exponential. So this one here is a simple moving average. We use exponential on the 20 and the 50. Why is the 20 the best? The easiest way I can tell everyone, top tip, if things make sense, it's good. So 20, that's 20 days effectively, yeah, on the daily. If we think about it, how many trade days are there in a month? 1 month, you're looking at about 20 trade days. If you're looking at around 4 weeks, which is 20 trade days, then on top of that, you're going to say, okay, the 20 moving average is only 20 periods back. So of course, that would mean that you're using 20 days, and that's why the 20 is so good. Really, if it goes back into human psychology, that's the key of TA. TA is understanding human psychology. It's understanding the market psychology as well. So 20 moving average is, if you were to ask me what is my favorite, the 20 every single time. When you're following aggressive stock moves, the 20. But yeah, make sure you always think about these moving averages from a logical standpoint. That's why often 20 multiples are also very good. Like 100 is also used quite strongly in moving averages. Telstra broke our internet. It turns off at 11 every night, automatically gone into stores, and they just say call support. You cannot do that, Pico. They don't have support anymore. Brian says hit the like button. Thank you very much. Now, I can't get round to every single one of your questions about stocks